Good morning, good afternoon, or good evening, and welcome to our 273rd weekly webcast. Now, if this is the first time you're joining us, welcome. If you've been with us before, welcome back. And the way this call works is this is an AMA, like you see on Reddit, Ask Me Anything. You can ask me business questions, investing questions, personal questions, career questions, any questions you have. And my humble goal is to help you take your career, your portfolio, etc., to the next level. So without further ado, let's begin. I'll get to your questions in a second. Quick announcement. So my new book called Finance Essentials for Managers is out. It came out yesterday. It's available on Amazon, and it'll teach you everything you need to know about accounting, finance, investing, etc. from scratch. There's tons of downloads available within this book as well if you purchase it on Amazon. Amazon's got a sale on it right now. It's already on sale. So if you just do a search for Finance Essentials and my name, you'll see it here on Amazon. It's available now on sale for $12.99 for the Kindle version, and the paperback version, which I think is almost sold out. There's 2 left here. And McGraw-Hill is going to add more so that Amazon will be able to deliver all of them. But anyway, check it out if you get a chance, and thank you. All right, more importantly though, let me get to your questions. All right, so first up, I have got XY squared is asking, what is the math formula that I use to determine which stocks or ETFs have enough liquidity? That's a great question. So illiquid stocks own you in a down market rather than vice versa. And a lot of hedge funds went belly up in the fall of 2008 because they owned stocks that didn't trade very much. So be careful of the liquidity trap. I'm going to show you exactly how to test for this. So what we're going to do is let's go together to Yahoo Finance, and I'll show you. You never want to buy more than 10% of the average daily volume on a stock. So let me pick a random ticker. Okay. Okay, I'm going to choose Yandex. Okay, so which I think it's a Russian company. So this company here has 0 volume, so obviously we won't buy this one. So I'll just type in Microsoft then. Okay, so you never want to buy more than 10% of the average daily trading volume. So what you do is this. You look at the average volume, and then you divide it by 10. Okay, so you never want to buy more than 1.9 million shares of Microsoft in one day, which is not going to be a problem for anybody. But please keep that in mind when you buy ETFs or when you buy any individual stocks. Yeah. All right, let me get to the next question here. All right, next up, Ray wrote regarding the VOO ticker, and the VOO is a ticker for the S&P 500. How do you check which is the European alternative? CSPX is not good as it's listed on the London Stock Exchange, and because of taxes, it should be an exchange in the EU. Yeah, CSPX is not that bad actually. I think the rate there is well under 0.1%. So let me show you what rates to pay, and then I'll give you a couple alternatives on how you can do research on different ETFs. So generally speaking, we want the rate to be well under 50 basis points. And the VOO has got a very, very low rate. And I'll show you what it is here. So as you can see here, according to Yahoo Finance, you got to double check this data right at the source, meaning go to Vanguard's website. The fee here is 0.03%. What that means is for every 1 share you buy in this S&P 500 ETF, which I own, for every 1 share you buy, you're only going to pay, for every $100 you invest, you're only going to pay 3 pennies per year in fees. That's pretty good. And generally speaking, you want that fee to be well under 0.5%. For the one that you mentioned, which is CSPX, I believe, I think this one is 0.07 or something. Yeah, this expense rate is not that bad right here. It's actually pretty good. Now, in terms of how do you do research on ETFs and how can you decide which ETFs you can invest in your country? So step 1, what I recommend doing is go to a free website called etfdb.com. That's etfdatabase.com. Never buy mutual funds because mutual funds are an absolute scam. The hidden fees and the fees that are published or that are shown to you are about 500 basis points. Okay, that's 5% fee. And mutual funds underperform ETFs. So what you can do is you can look at ETFs by geography here. Click on the country that you want to invest in. And then here you can look at over 1,000 ETFs in the United States. I'm sure you'll find some S&P 500 ones here. Now, I've got one for you that you can invest in from Europe right now. The ticker is SXR8, and this one is in Germany. Okay, and this is the S&P 500 as well, and the fee structure is commensurate with the one you mentioned in the chat there, CSPX, at 7 pennies for every $100 that you invest. Now, another way to do this is if you can't buy ETFs or certain ETFs in the country you're based, you can always use a product called eToro. Okay, it's a brokerage product. Do your research on it first. It's company based in Tel Aviv, but you should be able to buy anything through here. Last thing I'll say is talk to your accountant as well, because your accountant will tell you before you buy something if you can get a tax benefit from it, meaning can you put it in your retirement savings program in the country that you're based in. Yeah. And I don't recommend anybody do their own taxes. Please have an accountant. Doing your own taxes is like doing surgery on yourself because the tax code changes all the time. I promise you it's an incredible investment. It'll help you pay less, hopefully, and stay within compliance when it comes to filing your taxes every single year. Yeah. Now, one more thing I want to say. If you're not sure how to buy stocks in your country, or if you think you might be paying a little bit too much in commissions, what you can do is this. Do a search for the top 5 banks in your country. Call all of them and ask them to transfer you to their brokerage department. Then once you talk to the brokerage department, ask them, what are the fees, meaning the commission structure, and pick the one with the lowest fees, of course. If you're not sure what ETFs to invest in from which companies, I recommend sticking with the larger ones because they're more secure. Companies like Vanguard and iShares, and iShares is owned by BlackRock. And if you have follow-up questions on this, please let me know, and thank you. All right, Alex, how are you, man? Alex P. from Utah. It's been a couple months. Good to see you. How you been, man? I'm always great, thanks. I hope you're doing well. All right. Next up, the question is, what do you think about data privacy laws in the United States? Will they become more stringent over time? I believe in the EU countries, there are data privacy laws that are pretty strict. Yeah, if it weren't for Europe and European privacy rules, then whenever you use any map application on your iPhone or Android handset, the license plates would not be blurred out. So European regulatory bodies do a great job of keeping global companies in check when it comes to privacy. But I think what's coming next is AI-based laws in all countries. In fact, I think within a year, all countries will have AI ethics departments, right? Departments of AI ethics. Because as Warren Buffett said, once you open AI's Pandora's box, there's no going back. And the same thing with large companies. I'm seeing a lot of my corporate clients like Dell, who I presented to recently, and others, create CAIE executive positions. That's Chief AI Ethics Officer. So I'm a big proponent of that for sure. And, and in Europe, of course, you have GDPR, which all Americans have to be compliant with, which makes sure that you don't send spam emails and people can easily get off your email list and much, much more. Yeah. All right, next up, Googly. Hey, Googly. Googly, and I try to drink a whole thing of this every single day. Keep me young at heart. Googly wrote, hey, Chris, followed you for a while now. Thank you. You wrote, I found myself in my 30s with only 150,000 US in savings. That's not that bad, actually. And no investments. Would it be wise to join a paid group on stock options after learning myself? Any advice? Yeah, absolutely not. Don't ever take advice from anybody, including me, on telling you what stocks to buy or what options to invest in. Always do your own research. And my job, humbly, is to teach you all how to fish instead of providing you with a fish. And in my MBA degree program, one of the many templates includes templates like this that will help you pick stocks. In this template, I ask you 730 questions, qualitative, quantitative, and financial research-based questions, so that you can come up with your own target price and create your own financial model, etc. Always do your own research. Never listen to anybody on television either in terms of telling you what to do, because if the worst thing you can do is watch a fund manager being interviewed or a CEO being interviewed and then buy the stocks they recommend or the companies they represent. Because fund managers and CEOs or founders are the best salespeople in the world. That's how they got to where they are. Always do your own research. Never rely on anybody else. Otherwise, what will happen is you'll sell at the worst time. Another Warren Buffett quote for you. Mr. Buffett said, the New York Stock Exchange is the only store in the world where consumers sell stuff when it goes on sale. So always do your own research and don't get seduced into day trading, please. I promise you it'll all end badly. And there's a reason we can't come up with a name of any successful day trader in the long run because they don't exist. And be extraordinarily careful with options, which you type there, please. When you invest in options, you can lose way, 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 way more than what you invested. And I can go into more detail on that if you want me to. And in my MBA degree program, which you can learn about at harounmba.com, I teach you everything about options as well. But I want you to only use options to protect your capital, like an insurance policy, or you can buy what's called a LEAP, which means a call option that expires in 1 to 3 years. And only do that after you've done all of your thorough research on the underlying company. Now, I don't like investing in companies where I don't see material upside, meaning I look at companies where I can make a 5 by 5, meaning a 500% return within 5 years. Am I wrong a lot? Oh my God, yeah, most of the time. But if I'm a little bit right, I can do extraordinarily well, humbly. Yeah, always do your own research. Okay. 150K is not that bad. Not that bad. But what I recommend for everybody in this call is, make sure that you spend what is left after saving. It says saving what is left after spending. And have money taken out of your bank account in your paycheck if you can do it. Times are tough, I know. But have money taken out every 2 weeks and put into your retirement savings program because that money can grow tax-free. Yeah. And please try your best, everybody, to max out your 401k every year if you can. And for those of you outside the United States, to find out more about your 401k in your country, do a search on what is the 401k equivalent in your country name. Now, if all you did was you invested around $23,000 per year in your 401k, in ticker VOO, which is the S&P 500, which we talked about earlier, then in 20 years, you'd have over $1 million. And you wouldn't have to worry about volatility. You'd be able to sleep well at night. The longer the view, the wiser the intention. If your spouse did it, you'd have over $2 million in 20 years. It's really important to save as much as you can, please. Yeah. Okay. Next up, Shahar wrote, good morning, Chris and all. Great to see you. Good to see you. Okay. Andre, great to see you as well. And then we've got Matteo, who's one of my new students, my gold program from Italy. Great to see you. And thank you for all the feedback you provide me with on my program as well. Thank you for that. Okay. Next up, Alex wrote, Chris, what are your general thoughts on investing in oil and gas market corporate bonds? Yeah. So let me give a really quick teach-in on bonds. So the way that bonds work is as follows. Okay. So this right here is a United States Treasury bond. Okay. This is a sample I printed out so I can teach you guys. So the way that bonds work is if you want to invest in U.S. federal debt, which is the lowest risk investment on the planet, because the last company to go belly up on the planet, so to speak, would be the U.S. government. But if you want to invest in U.S. debt, you can buy what are called Treasury bills, okay? And they mature in about 1 year. And the yield is about 5%. And they're sold at a discount. What does that mean? Well, that means that the face value, you pay less than that. So the face value in this can be hard to see. Let me get closer. Is $100,000. So you might pay $95,000 for this, hence the name discount. And you'll make $5,000 by the time it matures in 1 year. So $5,000 divided by $95,000 that you invested means a return of 5.26%. That's a discount bond. What you can also do, and by the way, short-term rates are set by the Federal Reserve, right? But long-term rates are set by the marketplace, right? So, and you got to pay attention to long-term rates as well, because the 30-year rate, and I'm going to show you that in more detail in a second, the 30-year rate impacts your life big time. Why? Because if you have a mortgage, it could be based on the 30-year rate. And if the 30-year rate drops, meaning government debt drops, you can refinance your mortgage and save a fortune. Let me show you how the yield curve works really quickly, then I'll move on to corporate bonds and then municipal bonds, and I'll take the next question. All right, so let's go together here to treasury.gov. Okay, give me 1 second. So if we go here to treasury.gov, what we can see is we can see what interest rates are. So the way we do that is we go here to data, okay, and then we select here the yield curve. Then we're going to select the most recent month right here. And I'll explain what this means. So right here, you've got the 1 month, okay, which is shorter term debt. This is actually a 1 year right here, okay? And then right here, you've got the 30 year. And the way this works is as follows. Let's go to today's date. The most recent date I have is here as of yesterday. So as of now, the Fed funds rate is around this amount here. Okay, so the federal government sets this rate. And the marketplace sets this rate here, the long-term rate. And as you can see, the long-term rate, meaning the 30-year rate, is lower than the short-term rate. And what that means is the market is saying there's a decent chance that we might be heading into a recession. And so the yield curve looks like this: high today, low in the future. That's an inverted yield curve. A normal yield curve looks like this. And the reason why people are thinking that, hey, we might go into a recession if the rates are lower in the long run is because if rates are lower in the long run, what that means is this. It means that the government will have to cut rates to help the economy. A normal yield curve is when rates are higher. So I want you all to analyze and watch the 30-year closely. Why? Because your mortgage is based on that. So the 30-year mortgage right now is around 7%, and it's higher than the 30-year treasury. And the reason is because you and I are riskier to invest in for mortgages than the U.S. government is. Okay, now that we talked about the yield curve, and treasuries, let me talk quickly about corporate bonds and then municipal bonds. So corporate bonds, it's a way for companies to raise money. It's debt on their balance sheet, right? And basically the way it works is the yield curve we just saw for U.S. government debt is 4.5% here short term, and then 5.5% roughly in the long run, something like that. Well, because a corporation is more risky than the U.S. government, their yield curve is going to be higher up right here, right? So basically what you can do is you can get a nice return on an investment at a premium to what you make on U.S. treasuries by investing in corporate bonds. So which corporate bonds should you buy? Well, there's 3 ratings agencies out there that rate debt. Okay, there's Moody's, Fitch, and Standard & Poor's. And the way it works is they rate debt usually as follows. AAA is the best, then AA, then A. And then below that is BBB, BB, etc. And generally speaking, anything below like an A rating is risky. And that below A rating is referred to as a junk bond, also called high yield bond, also called non-investment grade bonds. So if you're going to invest in bonds, make sure it's A or above. And I recommend investing in bond ETFs. That way you're much more diversified. Now, what I'll do next is I'll talk about municipal bonds, and then I'll talk about what percent allocation of your investment portfolio should be in bonds after you do your research. Okay, so with corporate bonds, or with municipal bonds, the way it works is as follows. And I'm doing a vlog tomorrow on my YouTube channel on how bonds work. That's why I have these props here. So municipal bond means you can invest in a municipality. Now, you can lose all your money when you invest in municipal bonds. An example of this was back in 1994 in Orange County, which is a region in California, Southern California. The bondholders lost all their money because the town of Orange County, or the region, declared bankruptcy. Now, since 1970, the default rate on municipal bonds is only 0.1%, so you're relatively safe. So why would anybody invest in a municipality, like upstate New York bonds, for example? Because most of the time, you don't pay federal tax on it. So you're paying much less tax. And some municipal bonds, you actually pay no tax at all. So if we're comparing and contrasting a corporate bond that returns 5% and a municipal bond that returns 4%, the municipal bond is a better investment, assuming they're the same credit rating. Why? Because the 5% bond you might pay 30% tax on, but the 4% bond you don't. So the tax equivalent yield is you take the 4% divided by 1 minus the tax rate. So 4% divided by 1 minus 30 basis points for taxes. What that implies is 4% over 0.7, which is a return of 5.7%. So you're making more on the municipal bond on a tax-adjusted basis than you are the corporate bond. Now, with municipal bonds, what happens also is you can get coupons. So on the U.S. Treasury, which I mentioned earlier, sells which is called a discount bond, right, short-term debt. there are no coupons. And that's why they call them zero coupon bonds. But with municipal debt, you can get coupons. And what that means is it's like a dividend. And coupons are usually paid every 6 months, unlike with stocks, which is every 3 months, meaning a dividend. And the way it works, and the reason it's called coupons, and I love visualizing this stuff, is because many years ago, on the back of bonds, this is tough to see, you can clip out coupons, right? And then take them to the bank and get paid for that. So municipal bonds often have coupons, and they're 10 years in duration as well. Okay, now which bonds should you buy? And what percent of your portfolio should be in bonds? Well, I like stocks much better in the long run. Stocks are a much better investment. In fact, my personal opinion on the stock market is I think over the next 20 years, the average return on the S&P 500 is going to be between 15 and 20%. Why? And it's not going to be up that much every year, but on average it will, I think, because of AI. So many companies are starting to use AI products to the extent that they're going to hire fewer people, which, yes, could hurt the economy, but it's going to drop right to the bottom line, right, through expense management. So I'm really bullish on the stock market in the long run. Now, in terms of your allocation to bonds in your portfolio, what I recommend doing is this. Take 100 minus your age. And this is an old school private wealth management tip. Take 100 minus your age, and that's the percent of your investments that should be in riskier asset classes. So if you're 80 years old, 100 minus 80 equals 20. That means that 20% of your portfolio should be in relatively riskier stocks, 20% riskier stocks, and 80% in low risk investment grade bonds or high dividend yielding stocks. And I say that because you don't have as much time to make back the money if you lose it. So let's contrast that with somebody that's 25 years old. 100 minus 25 is 75. And what that means is 75% of your investments can be in slightly riskier stocks and 25% in lower risk bonds, for example, investment grade bonds, meaning bonds with a rating above triple B. And I say it's an old school way of thinking because life expectancy has gone up a lot. In fact, the average life expectancy is 26 years longer today than it was in the 1950s. So 100 minus your age doesn't really work as well as it used to, because I think there are people on this webcast that will live to 150. And people are retiring much, much later. So exactly what bond should you buy? Well, if interest rates are really high, then it makes sense to buy U.S. Treasuries. Okay? Because U.S. Treasuries, the default risk is zero. The U.S. government, again, is the last entity on the planet that would ever default. And one way to think about it is if you go back to the early 1980s, inflation was close to 20%. And so the government massively raised interest rates. And so by buying U.S. Treasuries in the early 80s, you could get double-digit return, risk-free. And whenever interest rates go up a lot, nobody buys stocks, or fewer people do, because you can get a nice return risk-free by buying these things here. When interest rates are very low, you don't want to own as many bonds. In terms of what bonds to buy in general in your portfolio, again, buy investment grade bonds and invest in bond ETFs. And I'd have a mix of treasuries as well as corporate bonds, AAA rated corporate bonds, really highly rated ones like Apple, as well as municipal bonds. Okay, in terms of oil and gas corporate bonds, you have to do research on that, Alex, because you want to make sure that it is investment grade, meaning the rating is way above triple B. Yeah, and make sure it has a good yield as well. And if you mention the bond, I'm happy to do real-time research with you here. All right, Manas, how are you? Manas from India wrote, "Good morning, my dear mentor, Chris, please. What a day it's been. Great. But by the way, your top two political legends in the U.S., yeah, I saw that. We'll debate twice. Yeah. So Biden and Trump are going to have two debates, one this summer, one this fall. Yeah. I don't know if I call either of them a legend, though. And then you wrote, Jamie Dimon is skeptical on inflation and a soft landing. Why? Yeah. So Jamie Dimon is the brilliant CEO of JP Morgan. He's been CEOing for a couple decades now. He's great. And he's generally more skeptical than other CEOs in general. Like, for example, he's been saying that cryptocurrencies and Bitcoin are a scam for many years. But JP Morgan actually does a lot of business in cryptos right now, right? They set the market. And the reason why he said that cryptos are a scam is because you can't verify if the maximum liquidity or supply on cryptos is legit or not. So by the year 2140, there will be a maximum supply of Bitcoin of 21 million Bitcoin out there. And Jamie Dimon said, how do we know that? Where's that documented? And he's kind of right. And so for many years, I've been saying that most cryptocurrencies are an absolute scam. And if you're going to invest in cryptocurrencies in your portfolio, make sure that no more than 5% of your portfolio, meaning your liquid net worth, is in cryptos. And also make sure that no more than 0.5% is in any one crypto like Bitcoin. Yeah, and I've owned Bitcoin for years. I publicly disclosed many years ago that I own the following 4 cryptocurrencies: Bitcoin, Litecoin, Ethereum, as well as Ripple. Yeah, now in terms of a soft landing, he's skeptical on a soft landing, which means he expects a hard landing. That hard landing means that we go into recession likely. The reason he's saying that is because he looked at the yield curve, which I just showed you guys a second ago. And so fixed income tends to drive the equity markets. That's why a lot of really smart stock market investors that work at hedge funds, they all have good friends that are fixed income analysts or fixed income portfolio managers. Fixed income means bonds. So if we take a look at the yield curve, which we did a second ago, I'll make this quick, I promise you. But if we take a look here at the yield curve, short-term rates right now are higher than long-term rates. And as I mentioned earlier, that implies that we are somewhat likely to go into recession. This doesn't always work though. Now, a normal yield curve looks like this. I'll show you. And you have to pay attention to this stuff because this impacts your net worth big time. Normal yield curve, it goes low to high. So let me get an image. Yeah, right here. So here's a normal yield curve right here. A normal yield curve means that rates are low now, but they're going to be higher in the future. And this is normal because this means that rates are going to be higher in the future and the economy is going to be better in the future. It's going to grow. And if it grows in the future, the government's going to raise interest rates to cool off the economy. Now, an inverted yield curve, which we have right now, here it is, looks like this, okay, more or less. Short-term rates are high, long-term rates are lower. And that means that we're likely going into recession. Not 100% likely, but there's a good chance of it. And that is probably why Jamie Dimon, the CEO of JP Morgan, made that comment. Okay, Phil, hey, how are you, man? So Phil is one of my platinum students, graduated a couple of years ago, my MBA program. He's based in Ohio, and he works at Rockwell. And so he wrote here, my company Rockwell, ticker ROK, eliminated bonuses and merit increases for several years. And there's a 3% workforce reduction in 2024. That's surprising given the defense exposure from that company. Our top executives will get pay increases, between 25 and 75%. Yeah, I'm sorry to hear that. Yeah. But tons of companies, I really believe, and I don't want you to think of me as being, unethical or immoral at all, but I'm trying to be unemotional about investments to the extent that I think that companies are going to be letting people go, cutting salaries because of AI. And this is really good for stocks in general, because I'll drop right to the bottom line. And that's, again, one of the reasons why I'm very bullish on the S&P 500 over the next 20 years. I think fewer people are going to get raises. I think people are going to be replaced with AI, which will drop right to the bottom line. But if anybody here feels that they're at risk of losing their job because of that, I'm here to help you. I'm here to help you network to get a better job, or heck, start your own company. And you can always ask me, and I'll help you out here. And anybody in my silver, gold, or platinum, or diamond MBA programs, I can always help you with your LinkedIn profile and network to get the job of your dreams or change careers. And so Phil followed up here with, I'm now finishing my business plan. Good for you. And then you wrote, I'll never work as a W-2 again. I love that. Writing my business plan has been fun and liberating. I love it. And if anybody is frustrated at work, like I was working for other people, and I'm going to say the following thing with love in my heart. Good. Because that will force you to get a better job that pays you what you're worth, or better yet, start your own company. And in my MBA degree program, in the 3rd semester, we have a venture capital boot camp where I teach you how to write a business plan. And most people fail with businesses that they start because they don't write a thorough business plan. And I really do believe that failing to plan is planning to fail. So you have to write a thorough business plan. I provide you with that template and many more in my MBA degree program. How do you know if you have a good business plan? A couple of things. Number one, you finish it. Most people start a business plan and they never finish it. Or they start writing it and they're like, oh my God, this is not a good business model. Move on to something else. So number one, you finish it. Number two, and this will help you decide whether to quit your current job or not. When you work for somebody else, when you start a side hustle, right? Meaning you write a business plan, you start a business on the side. When your 6 months trailing revenue, okay, from your side hustle is greater than your annual salary from your full-time job, that's when you quit. And of course, you and I, we all know here that if it's 3 or 4 months worth, you're going to quit anyway. And I do that just to keep you conservative as well. And the reason why I say 6 months is because you can never judge your business plan or your business prospects based on 1 or 2 month sales because of seasonality. You know, if you start your company November 1st and it's retail focused and you have a great November, December, you can't assume that you can forecast a great November, December for the whole year because of seasonality. Okay, next question is from XY Squared. I love that. Who wrote, can you explain what guidance is and how it affects the stock's prices during earnings? Yeah, absolutely. So what the way that guidance works is internally at companies, all the salespeople that work at the company will enter into a spreadsheet or some kind of ERP application a range of what they think they're going to close in business for the next 3 months. Okay. Then what happens is the CFO in the company will look at the total of the range of sales that all employees are expected to get. For example, if they add them all up, between $10 and $12 million. And that will help the CFO be able to tell Wall Street what to expect for revenue. Revenue and sales are the same thing. What to expect for revenue next quarter when they report earnings. But instead of telling Wall Street between 10 and 12 million, they usually sandbag it, right? They might say between 9 and 10 million or 9 and 11 million so they can beat. And so what happens is when companies report earnings every quarter, they report revenue and earnings from the past 3 months. Then what they do is, based on the methodology I just explained, they tell Wall Street what they're expecting to get for revenue for the next 3 months. So on their earnings conference call or in their press release, meaning their 8K, they might say something like this. And for the next quarter, we expect revenue to be between $9 and $11 million. And they do the same thing with earnings as well. They give a range. And they give a low enough range so they can beat. Now, there's something called behavioral finance, which means you analyze the behavior of finance executives. And a lot of executives, CFOs, after a while, you can learn what their guidance actually means. So for many years when Apple guided, many years ago, I think Oppenheimer was a CFO at the time, what they did was this. They would guide to a range, low end for revenue, high end of revenue, and they would report way, way above that range. They were sandbagging. And after a while, Wall Street picks up on this to the extent that if Apple only reported revenue at the high end of the range, not above, the stock would get crushed. So you have to analyze the behavioral finance of CFOs when they guide. One more thing on guidance. Sometimes you'll see a company report earnings and revenue, which are amazing. And guidance looks amazing as well, but the stock goes down. Why is that? Well, one reason might be because deferred revenue growth slowed a lot. And what that means is this. So by law, if I sell you a product, like you buy my book, and you give me cash, I can recognize that as revenue. But if you pre-order this book and you give me cash and I haven't given it to you yet, I can't call that revenue yet, or I can go to jail or get in trouble, whatever. So I can only call this revenue once I've shipped that book to you, the product. So what that means is this: that revenue, I can't recognize it yet. It goes on my balance sheet in what's called deferred revenue. It's liability. So when a company reports their earnings, the quarter, if deferred revenue went down a lot, it means that their pipeline for business is not that great. So the bottom line is, don't only analyze revenue and earnings for a given quarter and for guidance, but also scrutinize the change in deferred revenue from the current balance sheet versus the previous one. And if you have additional follow-up questions on that, I'm happy to talk about that in more detail. Thanks. Okay. Next up, Manas wrote, I'm a little stressed out. Sorry to hear that. About myself. I think I'm missing out the opportunity, like doing something big that may sound audacious, but I'm lacking somewhere. I can't do everything alone. Any advice? Yeah. Well, two things. Number one, I want you to write a business plan, okay? Just to document your ideas and your thought process. Number two, in the very first lesson of my MBA degree program, I provide you with this. And this is a daily schedule. And you don't have to sign up for my MBA program to use this. Actually, I'm going to give you a free version of this in a second. Just hang on. But what I want you to do is every single day, I want you to, at night, write down your goals and your entire schedule for the next day, including time for exercise, family, playing GTA 6 in 2025, etc. Then what I want you to do is I want you to score yourself at the end of each day before you make tomorrow's schedule. Take off 5% for every meeting you miss. Take off 20% if you didn't pray, if that's important to you. Take off 10% if you didn't, I don't know, go to the gym, whatever it is, right? So you score yourself. And it's very subjective, right? And that will keep you accountable to yourself to accomplish all your goals and make sure each day is productive. And if you want to get something done, give it to a busy person. You know, there's a reason why when we go on vacation and we have nothing to do, for some reason we can't find time to even exercise. Okay, so I would write that down and set goals as well. And I met with Tony Robbins years ago, and he's the reason that I quit VC and I teach now. But he told me that that the reason that most people give up on their New Year's resolutions by the third week of January is because they don't set a deadline date. So for all your goals, I want you to set a deadline date and write it down on the scheduling system, which I'll provide you with in a second, a slimmed down version of this. Always write down and vocalize your goals as well. Tell your friends about it because that will put pressure on you, and I say it with love in my heart, to get your goals done. Yeah, okay. So let me show you an example you can download right now of that template. I've got a slimmed down version. So if we go to harounmba.com/schedule, all lowercase, schedule, you can download this. Please load. All right, here we go. Okay, great. So click here to download the daily scheduling PowerPoint file. And this will obviously work in LibreOffice as well as Keynote and Google Slides. So let me open this up here. And you can completely customize this as well if you want to. That's me buying time while this opens. Okay, here we go. All right. And this is an old version of my daily scheduling system. Download this if you want. I wrote, please note, this format I use, delete that box, and you can customize this completely. Okay, so for me, what I did, and a lot of my students actually use this, and it helps a lot. So this was years ago. These are courses I want to complete, and I have deadlines for them right here. And then down here is what I'm going to accomplish that day. And I print this out and I do it by hand. But I included here, go for a walk, because Steve Jobs used to go for walks every day at 1 o'clock and come up with great ideas. Exercise, weights, family time for dinner, go to bed at 10, etc. And then here are other to-dos and goals. And then this was, did I send out promotional emails? And up here, did I put God first, then family, diet, etc. All that stuff. Did I wash my face twice a day, etc. And then up here, you put the day number. So day 1 is the first day you do it. And I want you to see if you can do this for a gazillion days in a row. The record for my students, and I have one Diamond Growth Accelerator student, he's awesome. He's on day 44 days in a row. And if you have questions about this, please let me know. And again, you can customize all this stuff as well if you want to. All right, so let me go back to Big Mode Chris. Hey there. Okay. All right, next question is, where is AI going? Like ChatGPT launched Omni 4.0. I saw it. Yeah, I played with it. It's good, but not that impressive. It does a good job, but not phenomenal. One of the 4 founding members left. I saw that. Yeah, he was a CTO. He quit. Yeah, but he was also one of the people that forced the CEO to resign temporarily. Yeah, so there were a bunch of political issues there. Yeah. So I played around with Omni 4.0. I actually don't find it to be as good as ChatGPT 4. I have seen and played around with the mobile version though, which is pretty cool. It's not perfect yet, but it's only a matter of time until we all replace SIRI and ALEXA on these devices with ChatGPT. I've had conversations with ChatGPT with using the app here as well, and it's incredible. Yeah, I'll go on walks and wear my headset and just ask questions about stuff. Yeah, let me show you. All right, so within ChatGPT, and it's in beta right now, so let's go here to ChatGPT OpenAI, and let me know if anybody on this call has tried Sora. I haven't tried it yet. Yeah, so what Manas is referring to is right here, ChatGPT 4.0. It's not that robust. I stick with ChatGPT 4 for now. I find it's better. And 3.5 is almost good enough too. So if anybody in this call has tried Sora, let me know. I think it's only available for alpha or beta release at this point, but it's going to change everything. And I'm working with a company here in the Bay Area. They're using me as a guinea pig to create a virtual avatar of me to be able to teach. All right, but it will not be able to replicate my awful dad humor. Yeah. Okay, but Sora is going to change everything, man. Like even Tyler Perry, who makes great movies, he canceled his $800 million studio CapEx project in Atlanta the second he saw Sora. Sora is unbelievable. Yeah, and it's only a matter of time till we'll be able to type in this. Create a video game for me, which has elements of The Last of Us Part 2, as well as Uncharted and GTA 4, and set it in Canada in 1962. Boom. Then you can play that game. How cool would that be? Yeah. All right. And I've told you all, when GTA 6 comes out next year, you ain't going to see me for about a month. Yeah. Okay. All right, next up, hey, Ramon, how are you? Moving on to T. T wrote, hey, Chris, I've been working for cash reconciliation team at a hedge fund over a year and been networking really hard to get to know people within the firm. Recently, I've had a great chat with a person at a portfolio management team and been starting to help him. Oh, I can help you big time. You wrote, and he's been teaching me things so I can help him more and also introduce me to portfolio managers. Do you think it's a good opportunity for me to eventually move to portfolio management team? What do you think I should do or plan to do down the road? Oh, I love it. Yeah. Yeah. A lot of people, when they want to work at a hedge fund as an investor, make a lot of money. They start in the back office, right? Through operations, trade, reconciliation, administration, etc. Then they network internally to get a higher paying job. Usually in the trading part of it. Yeah. But if you network like crazy, get to know portfolio managers and help them materially, eventually you will get promoted to become an analyst. And what I recommend that you do is this. So I'm going to show you exactly how to get that gig. So what I want you to do is, if you sign up for my MBA program, whatever, I want you to complete this spreadsheet here. Okay, and this is based on my experience working at hedge funds and also venture capital firms. And what you can do is you can analyze a company and answer 730 questions I have here, analyzing the qualitative, quantitative, and financial research of a company, including forecasting the financial statements, etc. Every one of these tabs has a video in line 20 that explains how to use that. More importantly there, the bottom line is this. I want you to print out the executive summary. Okay, and this is just dummy data here. Okay, so it's got fundamentals, valuation, and technical analysis. And my portfolio manager used to love when I did this for my PM, and my analysts that work for me, I had them do this as well. So what happens is this. You're going to complete, and again, that's dummy data, the entire 730 questions, and then print out a one-pager that has fundamentals, valuation, and technical analysis right here. And you're going to give that to your portfolio manager every week or two. Don't just give long ideas, though. Give short ideas as well, because the frustration a lot of portfolio managers have with new employees is they tend to only pitch long ideas. Yeah. I love it, though. I love the fact you're networking. And there's a reason why there's so many CEOs that started in the mailroom with no education. Like the former CEO of Goldman Sachs, Sidney Weinberg. He was a CEO for a couple decades. He started in the mailroom at Goldman Sachs. The same thing with Simon Cowell, a guy from American Idol. Barry Diller as well. He started in the mailroom. Tons of people have. David Geffen, the former president also of ESPN, the former editor-in-chief of Cosmopolitan magazine. Why is it important they start in the mailroom? I'm not saying you have to start in the mailroom. Because if you work in the mailroom, you get access to senior people. You see them every day. You might say, here's your mail. Did you see the Blue Jays beat the Yankees last night, as they always do, etc.? Yeah. But networking is everything. If you want to learn more about networking, to take your career to the next level, what you can do is go to my website, which is harounmba.com, and then scroll to the very bottom, and then you can download this book here called Networking to Get Customers, a Job, or Anything You Want. Your network is your net worth, and relationships are always more important than product knowledge. Always. And if you don't network like crazy internally, you're going to look around and notice that your colleagues, your peers, are getting promoted and raises faster than you because they networked. Everybody needs multiple Yodas or mentors within your company. And God bless you for finding a portfolio manager and a portfolio management team to mentor you as well. And don't forget to ask, right? Closed mouths don't get fed. Ask them after you get to know them a bit. How can I add more value and potentially join your team? All right. Next up, Manas wrote, is the United Arab Emirates or Dubai new land of opportunity because visas to America is like a 5-year timeline where Dubai is maybe days. Also, it's tax-free, and maybe AI, crypto, and blockchain are popping up there. Yeah. So I've been to Dubai a number of times. I raised a lot of capital there for my venture capital fund I worked at years ago. One thing I'll say is that there's not as much risk taking in Dubai as you think. And the reason is that only 15% of people that live there become nationals, meaning they get the passport, right? It's hard to get. And if you start a company there and you're not successful and you lose money, there is a pretty high probability you can be kicked out of the country. So what happens is a lot of people that work in Dubai and the United Arab Emirates, what they do is they work for large companies there, right? And they get the tax advantage, et cetera, as an expat. But starting a company can be tricky. Yeah. I would start a side hustle while you have a full-time job first and see if that side hustle takes off. And of course, write a business plan first. Yeah. Okay. Okay. Motivation Station, good to see you. Alex P. Keaton wrote, good advice with regard to the bonds. This bond appears, okay, the oil and gas bond you mentioned earlier, corporate bond, appears to be A+ rated. Yeah. So it's investment grade, but not the highest rating. And it looks to have an extensive filing on SC website. Anyway, I'm still doing due diligence. Awesome. Always read the investment offering memorandum before investing in anything. So you can do it for bonds, you can do it for ETFs, etc. So for example, when Facebook went public in 2012, they issued, or Meta I should say now, they issued this S1 investment offering memorandum that lists all the risks. Yeah, read these things. Most people don't. Yeah. Okay, Shahar wrote, hey Chris, a lot of Bitcoin are lost due to early days handling mistakes. Yeah. Does that mean that the real value of Bitcoin is higher than it is, meaning low supply to the market? Yeah. And it's exactly, we're seeing the same trend in the United States with unemployment. So every single week, 100,000 baby boomers retire. And that means that unemployment is probably higher than we think. But unemployment is measured based on the number of people actively looking for work. So I agree with you. Yeah, especially in the old days before people had Ledger Nanos or cold storage wallets with Bitcoin. A lot of people lost them. So who knows what the real supply is out there? Maybe it's 20 or 30% lower. We just don't know. Moving on to Zaid, who wrote, hey, Chris, hey, say that I own a business worth hundreds of millions of dollars, but the Indian taxation system is complicated, so I want to shift my business to another country. What countries have an option where I can buy jets to save tax, for example? Yeah. So the way that the rich become uber wealthy is they all have tax accountants, okay, and tax attorneys as well. And they pay these attorneys like $1,000 an hour. It's crazy. And I've hired them before, and I hate it because I'm like, can you talk faster? But you need to hire a tax accountant to help you out in that area. And the tax code changes all the time. And as I mentioned earlier in today's call, please don't anybody do your own taxes. Have an accountant do it, because they might save you money and keep you within the confines of the law as well. In terms of what offshore islands or regions to look at, it all depends on where you live. So for me, I started an offshore bank. I live in the United States. I started an offshore bank in the British Virgin Islands, right? It made sense to do so. If you're in the United Kingdom, it might be Sark. It all depends. So I would talk to a local attorney and ask them. Now, the way to get access to a cheap attorney or lawyer, if you're in the United States, just go to LegalZoom.com and hire a lawyer there and ask them. And I'm not sponsored by anybody, nor will I ever be, because I'm true and pure to my students when it comes to my market. But what you can do is do a search in Google there in India. Do a search on what is the LegalZoom equivalent in India. Yeah. Okay. But the reason, again, that the rich become very wealthy is, well, they have their own companies, right? And it's gotten ridiculous to the extent that Warren Buffett, his real tax rate between 2014 and 2018 was 0.1%. And the richest 400 families in the United States, only pay about 20% in taxes. And Jeff Bezos in 2007, when he was already a billionaire many times over, what he did was not only did he not pay taxes, but he got $16,000 back when he filed his taxes. That's $4,000 for each of his 4 kids. So there has to be a taxable event in order for you to pay taxes. So if I'm a billionaire and I own shares in my company and I don't sell any shares that year, I don't pay taxes. It's not fair, but it is what it is. Yeah. Okay. Next up, Q Franco wrote, can you explain the investment strategy with ETF investing into state debt, ticker TLT, when to buy it and when to sell? When investing in it, should I look at the market of the 20-year federal Fed rate? Yeah. So as I mentioned earlier, I would only make treasuries or T-bills, like one, which means U.S. federal debt that matures in 1 year or less. Make that a bigger percent of your portfolio when interest rates are really high, because it's free money, right? And the last company to ever go belly up would be the U.S. government. Yeah, that's what I would say. And for any individual bonds, make sure they're investment grade in general. And a safer way to invest in bonds is to buy ETFs, okay, bond ETFs, and buy them from reputable companies only. Okay, yeah, like Vanguard or iShares, which is owned by BlackRock. Yeah. Okay. All right. Next up, T wrote, also, I want to ask your thoughts regarding CLO and private credit. If you had a choice, do you have any preference between the two products? Yeah. I need to do more research on that in order to give you a good answer. What I'm working very hard on is, and every single week, every Thursday, every Friday, I publish a vlog that teaches finance based on TVs and movies. I'm working very hard on this one here, the Big Short. That'll be coming out soon. It might take me a couple of months to really nail this one, to explain everything from scratch in terms of the fall of 2008, when we were within 24 hours of bank machines not working. Yeah. Okay. Moving on to Toby. Hey, Toby. Toby wrote, hey, Chris, hope you're having a great week. I am, thank you. Hope you're doing well. What are your thoughts on suing an ex-employer for unjust termination of employment? Oof. So first of all, I'm not a lawyer. what I would do is I would go to LegalZoom.com and ask somebody for an opinion there. Yeah. And I don't know the terms in terms of why this person was let go, but you might be entitled to a really large payout. But you also have to be careful, because if you're not going to get a very large payout, and if this gets publicly disclosed that you sued, then it might be harder to get another job somewhere else. Yeah, but talk to a lawyer. I'm not a lawyer. Yeah. Okay. All right. And the way you can do it is if you network and talk to lawyers locally wherever you're based. If you don't have much money yourself, you can say, listen, I don't have money to pay you, but I'll give you 20% of whatever settlement I get. Yeah. And I had one student in Florida that got $500,000 because of that. Yeah. Okay. Next up, Manas wrote, you're 100% right. Thank you. You know that screw it, I'll be applying for Y Combinator and the Teal Fund this week. By next week, before your webcast, I would apply to these two at least. I can't. Yeah. I'm with you. Yeah. So, and for those of you that don't know what Y Combinator is, so Sam Altman, who's the head of OpenAI, before he joined OpenAI, he was the president of Y Combinator. And Y Combinator is an incubation firm. And what they'll do is they'll invest in a lot of startups, give them maybe $100,000 each. They'll take, I don't know, like a 10% stake in the company, and they'll help these companies grow, and then venture capital firms will invest. And a lot of very well-known companies like Airbnb came out of Y Combinator. And I have a lot of students that have applied for Y Combinator. If you get rejected, just keep applying, please. Don't give up. Write your business plan first, and then your investment slides you're gonna show Y Combinator. You take out of your business plan. Yeah. And I can provide more detail on that if you want. But for any presentation that you're going to give, whether it's for a startup or a real a presentation in front of a lot of people at work, I always want you to use the Airbnb pitch deck. Okay, I'm going to show you. Yeah, when it comes to slides, less is more always. Okay, so on each slide, you see here, these are the slides, and don't make it more than like 10 or 12 slides. But there's 3 bullet points in each slide or 3 images. That's the power of 3. And we can't digest more than 3 things on a slide ever. Keep it simple, always. And Steve Jobs used to talk a lot about the power of 3. And that's why with a lot of images that we see that we love, like the ones of the beach, for example, there's 3 layers. It's the rule of third. Beautiful pictures have 3 layers. You know, quite often you got the sky, the ocean, and then the beach, the rule of thirds. Okay. Okay. And then you wrote, Manas wrote, an election comes up in the United States. The markets are going up or down. Yeah. So generally speaking, without getting political, which I'll never do. And by the way, am I a Democrat or Republican? It all depends on who the candidate is. I'm probably more of a libertarian. But generally speaking, let me delicately answer this. All right, there's a political spectrum. And on the political spectrum, on the right, you've got countries that believe in capitalism, freedom, etc. On the left, you've got socialism or communism. Okay. And the more right-wing, within reason, the more right-wing a politician is, or the elected politician, the more likely it is the markets are going to go up. Why? Because if you're more right-wing candidate, relatively speaking, you're likely going to make taxes lower and make government smaller, like Ronald Reagan did, for example. And so Jimmy Carter, who's a Democrat, in the early 1980s, late 70s, you know, the markets didn't really like him very much. I love him. I've met him. I've got a book right here that he signed for me. He's a wonderful human being. But he was a Democrat, more left-wing, right? Then Ronald Reagan was elected, and he's a Republican. I'm not saying this is always the case, but the markets did a lot better because he believed in lower taxes and lower government as well. Yeah, again, I'm not revealing which candidate I'm voting for. I don't even know at this point who I will vote for. But I will watch Saturday Night Live and enjoy every second. Yeah. Okay. And then Manas wrote, you're right, but at least Dubai has a bunch of opportunities, like new ones for AI and biotech and all that, and also how to do VC. Yeah. All right. You wrote, how do you raise money? Yeah. In general, it's kind of tough for me to answer that. But what I would say is number one, have an incredible pitch deck, like the Airbnb pitch deck I showed you. Number two, have an amazing LinkedIn profile. Number three, aggressively use LinkedIn to set up informational meetings, okay, with people you have a couple things in common with. And then once you get to that informational meeting, then you can talk about why you're meeting. And for more details on that, just go to my website, harounmba.com, and download my networking book. Renveer from Mauritius, how are you, man? Good to see you. Okay, moving on to Akash, who wrote, I'm thinking about money gives a lot of mental pressure. How do you stay joyful and peaceful while trying to make money? Yeah, I hear you. I hear you. A couple things. If you chase money, you ultimately lose your money and your dreams. But if you chase your dreams and you don't care what people think of you, something beautiful happens. Your dreams come true and the money follows accidentally. It always does. Right? But you got to be in it for the right reason. Like, never choose an occupation or start a company because you want to make a fortune. Do it because you want to change the world and because you care. And do it because you'll never sell that company. You want to put your dent in the universe. Think with this first, and this will always work gooder. Yeah. But there's a hell of a lot of depressed people that work on Wall Street. And don't make money your God. Yeah. It's one of the 10 Commandments. And Renveer wrote, can you explain how traders used to profit with bid-ask spread market making? Yeah. So generally the way it works is whenever you want to buy or sell something, there's a buy price and a sell price. And the best way to think about this is as follows. There's bid ask. And the best way to think about it is you always get screwed. Let me explain how. If you want to buy, you have to buy up here. When I'm paying the higher price, not fair. If you want to sell, you have to sell down here. And if something is very illiquid, meaning it doesn't trade very much, then the difference between the bid and the ask spread is quite wide. And traders on Wall Street will say, oh my God, the spread is so wide you can drive a truck through it. So what I'd love to do is only invest in securities or any investment class where the bid-ask spread is quite narrow. And usually when you see that, it means it's liquid as well. But a trader that's a market maker on a stock that's very illiquid can make a lot of money. Yeah. Okay. And then Joshua, hey Joshua, first time seeing you on the call. Hope you join us again. Wrote here, Chris, what's your opinion on hiring students from IITs and hiring them remotely? I'm running a small startup and I'm looking for great talent. Thanks. Yeah. So in the United States, we have MIT. It's a great school. In India, there's 5 IITs, and each of those IITs is way better than MIT. So really, really well respected. Yeah. But you'd have to tell me the type of company you're trying to start. Is it like a Cognizant, Wipro, Infosys, Satyam, etc.? If so, starting a consulting firm is really cheap, right? There's over 100,000 consulting firms in the United States, right? It doesn't cost that much to start a consulting firm. But let me know if that's what you're looking to do, a consulting firm. I'm happy to help you. Yeah. Okay. And then T wrote, thanks, Chris, for your advice again. You're most welcome. I'll continue to learn and help him and the portfolio managers as much as possible. Regarding paper, the team is CLO team and a lot of things that I'm helping with. That's awesome. Yeah. So yeah, keep writing those one-pagers, okay, and keep providing the portfolio manager with those one-page write-ups. Make sure it's not just long ideas, but shorts as well. Yeah. And I promise you this will help. And the one-pagers I showed you earlier, and I have a printout of it. That's under a bunch of books here. But the one-pager that I create, that one-page template, I used to have hundreds of them up on my wall in my office at my hedge fund. And I would walk around, just kind of really think about which investment should I put in the book and why. Yeah. And the way you know you have a good investment is kind of like the way you know you have a good business plan. when you finish the investment write-up. Okay. All right. I've got Eugenia. How are you? Good to see you. And then we got the Oracle, which is Kemi from Ottawa. I miss you. How are you? You wrote, "Hi, Chichi, just checking up on you." And that was my nickname growing up because I couldn't say my name, Chrissy. So I called myself Chichi. Yeah, Kemi, good to see you. And I want to inspire all of you by showing you Kemi's LinkedIn profile. Speaking of Y Combinator, which we had a question on earlier. So I'm going to go here to Kemi Tade, originally from Nigeria. Lived in the UK for a while and now lives in Canada. Used to live in Bramalea or Brampton, now lives in Ottawa. So here's Kemi. So what Kemi did was she networked like crazy. This is awesome. And you guys can check this out too. And she is a thought leader. And she gave a speech through Y Combinator on fundraising for startups. So earlier in today's call, somebody asked about Y Combinator. Somebody asked about fundraising. I want you to go to Kemi Tade's LinkedIn profile, which you can see here. And I want you to watch a replay of this. Yeah. Okay. And then Alex P has a question about Ilya. So Ilya Strebulov, who I interviewed last week on my webcast, he's the #1 venture capital professor on the planet. He's been at Stanford as a professor for 20 years. And I actually guest lectured in his class, and I was on lots of panels in his class. And part of his curriculum, actually, for Stanford MBA students, mentoring students. I mentored tons of them with their business models. And this is his book that he just published. And the Financial Times, I think yesterday, just did a write-up on this saying it's the best new book in business. Yeah, it's great. It's called The Venture Mindset. I think it comes out in a week or two, but he gave me an advance copy. And to learn more about the Venture Mindset, and I don't get any compensation for this, but to learn more about the Venture Mindset and Ilya and great tips on how to raise money, how to start a company, how to work in venture capital, watch my webcast from last week. So go to my YouTube channel, watch last week's webcast, meaning webcast 272. So the question is Ilya from Stanford going to be on the live stream today? I watched a video with him talking. Yeah, no, that was last. I'll show you how to access it. Yeah. So he did it last week. So let's go to my YouTube. Yeah, so he did it last week. So on my YouTube channel, just click right here to watch a replay of the event if you want. And my team put together all the chapters as well. So what you can do is, I don't know, if you want to learn how to network, if you did not attend university, click here for example. Yeah. Okay. And then Castlevania Kid wrote, and I used to play that. I used to play Doom as well, and then Quake. So a friend of mine tried to prove Chris is another guru selling courses after his research and watching finance podcasts with 20-year-olds. 20-year-olds are telling how they got jobs or promotions on Wall Street networking and their experience in the working of Wall Street. He finally admits everything Chris says is true and still works today. Thank you. Appreciate that. Whew. I'm scared about reading that one. Just kidding. No, I don't filter anything. I read everything. Yeah. And by the only thing that's filtered is when you enter in web addresses. For some reason, YouTube doesn't allow it to go through. So if you want me to look at a web address, always type it like this. Like if you want me to go to fox.com or cnn.com, you type www space DOT space CNN space DOT.com. Yeah. And also there's other words that are filtered out. Yeah. Okay. And then Kemi wrote, is it crazy to want to move from Canada to UAE? The tax in Canada is just something else. Yeah. Yeah, if you're going to do that, you'd have to have a large company sponsor you. It's hard to move there and stay there if you're not a Dubai or UAE national. Yeah. But Kemi, I'd visit the UAE first. It kind of has a Las Vegas look and feel to it, although it's cleaner and richer. But just try it out. Yeah. And I have lots of friends that live there, including the number one mentor on the planet for me and my best friend, and the reason I am who I am today. And I'll show you who that is. Okay, let's go here to LinkedIn, and I can put you in contact with this guy if you want me to. His name is Jason Denny, my best friend ever. So he moved there as well. Yeah, so I worked with him at Accenture years ago. He lives there now. He started, I think it's a crypto company. He's doing incredibly well. But I can hook you up with him if you want to as well. Really, really good dude. Yeah. And his nickname is Mimo. Make sure to tell him that, because he called me Chich when I used to work with him. All right. Okay, next up, T wrote, checking requirements based on legal indenture for eligible trading of loans. Do you think I should write a paper about credit loan recommendations? What would be the best source to learn from? Yeah, if this is the same person, I think it is, that's networking within a hedge fund. So portfolio managers at hedge funds, they don't want to hear theory. They want actionable ideas. And if you can document your investment ideas, fixed income, equity, whatever it is, on a one-pager, I think they'll like that. Yeah. Okay. Next question is from Kemi, who wrote, what are your thoughts on a coaching business, and is it scalable? Yeah, I think it's very scalable. It's something I've done, but you got to have different tiers, right? So when you sell a product, you need to have lower end and higher end tiers. And you got to make sure that some of your products are more scalable than others to the extent that anybody can watch them online. And I'll show you what that means. So the way that my business model works is if I go here to my website, so I've got 4 products, right? So there's the Silver MBA. And this MBA program, anybody can watch it starting now. It's on Netflix, whatever. So this one is the most scalable of what I have. Then these two here, and I think you graduated from Platinum. I think your husband's in Platinum now this year. These two are less scalable because they include live teaching and one-on-ones. And this one here is the least scalable one I have, right? So this here is the Diamond Growth Accelerator. Which includes all this stuff here. The problem with just doing something like this, which is one-on-one coaching, is you can't scale it as much, Kemi. So what I recommend doing is you create a lower tier that you can scale, meaning just video-based. Yeah. Okay. Moving on to Renveer from Mauritius, who wrote, I offered to give my university a training on how lecturers can use AI in their teaching. Very cool. And Renveer, what I would do, and everybody in this call, it's really important to guest lecture and then put that on your LinkedIn profile as well. Because from a social proof perspective, it gives you more credibility. Yeah. And the way that I actually started guest lecturing at Stanford Business School was I was like a pit bull on a pork chop. I was very proactive, and I kept contacting the associate dean over and over and over again. Never got any response. And then one day, I think it was in 2014 or 15, what I did was I called, and the associate dean picked up. And I said who I am. I'm nobody, but I said, I'd love to guest lecture, yada, yada. And she was in a bit of a hurry. She said this to me. She was very polite. She said, I don't know, email the professors at the business school and tell them I told you to reach out. So I emailed every single professor at Stanford Business School. At that point in time, I was 30. And then I wrote, your associate dean said to reach out to you about guest lecture. And I got a response from almost all 30, including Myron Scholes, who created Black-Scholes, and others. And Ilya as well, actually, yeah. And Ilya's become a good friend. Okay. All right, next up, Zaid wrote, also, Chris, I want to ask you that a lot of people nowadays here in India buy land in tropical areas and start an Airbnb there, and they get 7 to 9% yield, which is 3 to 5% more than residential real estate. I love where you're going with this. Yeah. And you wrote, do you think this is a nice side hustle to grow your net worth Yes, absolutely. And it's something I do as well. So what I do, and for anybody in my MBA program that has signed up or will sign up, I have a real estate elective coming this fall that's going to be exclusive to my MBA students. And it's not just how to buy a house or an apartment, but it's also how to buy rental properties and investment properties. So what I do is this. So I was in Florida a month ago, and I visited a couple of properties there that I put bids on to buy. And what I did was I screened them by looking at Airbnb to see what they're rented out at. And what I did was I made sure that the rental amount more than covers a mortgage that I was going to put on. And I bought a couple houses. And it's a great investment. And so the best place to start looking to invest is go to Airbnb, look at which region in the country or the world people rent from, look at the occupancy, meaning what percent is it booked. You can track that over time, and look at the price. And that price should, of course, be much higher on a monthly basis than your mortgage. So you're making money two different ways. One is through rental, and the second is through a capital appreciation of the underlying product you bought, meaning the piece of property. And my grandfather, God bless him, used to say, Chrissy, buy land, they're not making it anymore. Yeah. And when you invest in real estate, you got to be patient, though, and understand these cycles can last 10, 20 years. So you got to tell yourself, I ain't selling this piece of property for at least 10 or 20 years. Yeah. Okay. And for anybody looking to buy a house right now, if it's your first house and you're worried about, can you afford the monthly fees and all that stuff, think about buying a place where you can rent out a room, right? And if there's a room that is not connected to the house, or if you can build a door to the outside to a separate room for security reasons and rent it out through Airbnb, then think about that as well. Yeah. And make sure to research if in the municipality where you're looking to buy the house, if you're allowed to use Airbnb to rent it out even. Yeah. Okay, moving on to Renvir, who wrote, I got a meeting with the head of the university, and he told me to send him a presentation showcasing the content I will talk about. As an educator yourself, what are the top 3 activities that most of your time comprise of when it comes to teaching? Yeah, most professors that teach in universities, teaching is important, okay, as well as the second thing that teachers love most is research. And research can be, them doing a lot of research to see and find trends within a given industry. So, for example, Ilya Strivelov, who's a finance professor at Stanford University, he spends a lot of time teaching, of course, but he also spends a lot of time doing research as well. So those are 2 things I gave you. In terms of a third one, I don't know. Sorry. Okay. And then W Health and Piano Exercises wrote, very well said. Thank you. All right, and then we got Phil Germany from Ohio, who wrote a great book a couple of years ago called Super Students, which I bought. It's my first student that wrote a book. It's about chess. So Phil wrote here, are there any rules of thumb when it comes to pricing a service or a product for a startup? Thanks. Yeah. So what I recommend is if you want to get financing or venture capital firms or investors to invest in you, you got to make sure that you have insanely high growth, right? So if you can have a freemium product offering, right? So for me, for example, this webcast is free, and then I have other products that people buy. And what venture capital firms will do is they'll look at the growth in subscribers. And I'll give you a great example. This is a funny one. So many years ago, there's this kid, Evan Spiegel. He went to Stanford, but he's from Southern California. And he was up here in the Bay Area trying to raise money for a startup. And he was explaining his business model to old venture capitalists. And the venture capitalists looked at his app, and they're like, I don't get it. I mean, your business model takes pictures and those pictures disappear. Like, what if I want to take pictures of my kids and stuff? I don't want those pictures to disappear. That's a dumb business model. I'm not going to invest. That company was Snapchat. And then Evan Spiegel came back to the Bay Area a couple of years later to try to raise money again. And he said, remember me? I'm trying to raise money. I think we met a couple of years ago. And the VC was like, yeah, I remember your business model. And the VC said, I don't know. How many subscribers do you have? And Evan Spiegel said, well, we have 6 million. And the VC was like, oh my God, that's the best business model I've ever heard of. So all that matters is get big fast through a lot of subscribers, right? If you build it, they will come. That's a quote from Field of Dreams. You can monetize it later. Yeah, but I'd have a tiered pricing model, which is what I do as well. And that way you can upsell, cross-sell, or downsell as well. All right, Zippo Gimnovic said, good day, sir. How are you? Okay. And then Renveer said, can you elaborate a bit on how market-making traders profit from the bid-ask spread? Yeah. Well, it's like so when you go to a market, right? Say there's a market where people are selling apples. What happens is the person that's selling you apples buys it here, and they sell it here. So they make money on that spread. And that's how to think about it with traders as well. And the less competitive a market is, like if there's one person selling apples, right, they could sell up here, right, they buy here. But if there's tons of people selling apples, then that narrows, right? So there's kind of a fine line or balance between, if I invest in selling an illiquid product, I'm not going to make money, but I'll make a big spread. So I want to be somewhat competitive so I can get more customers, so to speak, but not too small where there's no margin. Yeah, if that makes sense. Yeah, and I know you're in my Silver MBA program, so in about half hour, what I'll do is, if you want, during our weekly Zoom call, what I'll do is I'll walk through real life examples with you. Yeah. Okay. Moving on to Joshua, who wrote, regarding my last IIT talent question. Yeah. I'm looking to build a daily fantasy sports app. My MVP, meaning minimum viable product, will be launched through the web browser first. Yeah, cool. Yeah, make sure that there's a free version so that you can scale, get as many customers as possible, and never use your own money. I mean, you can bootstrap a little bit at first, but I recommend getting high net worth investors to finance it. And I teach you how to network to meet with investors to raise money. I've raised and managed humbly over $1 billion in my career. My methodology works. Talk to high net worth investors initially, because the sales cycle is quite short. Don't waste your time with venture capital firms yet, because the sales cycle is long. Yeah. Yeah, and the talent that you want, because you want to hire graduates from the 5 IIT schools in India, it might be really expensive. So you might want to think about giving out options as well. Never use your own money. Always use OPM. Not opium the drug, but other people's money. Yeah. And never get a bank loan either, because banks are chicken, and if you miss one payment, they'll take everything. Yeah. Okay, Dr. B wrote, it's a great honor and a great pleasure to see you, Chris. Best wishes from Germany. 2/3 of HBS, Harvard Business School, is BS. Or maybe that's Haroun Business School. Great to see you. I hope you're doing well. I hope your consulting business is going well as well. Okay, moving on to Manas wrote, actually, FYI, Airbnb is expanding in India as we have the largest Gen Z population in the world. Very cool. Very cool. Yeah, but buy rental properties. Yeah. Okay. And you always want to buy the crappiest house in the nicest neighborhood instead of buying the nicest house in the crappiest neighborhood. Yeah. Cool. All right. Moving on to Mina wrote, good afternoon, Chris. Hey, I admire your ambition. Thank you. I'd like to invest in stocks, bonds. Any recommendations? I'd like to start off with a small amount and then increase. Thank you. Yeah. Yeah. So initially what I recommend doing, if you're just getting started, is to invest in ETFs. Okay, make sure that they're liquid, as I mentioned earlier, and from reputable firms like Vanguard or iShares. BlackRock owns iShares. I would start with low risk ETFs, like Dow 30 components or S&P 500, and then expand from there. And I diversify to the extent that you have no more than 10% of your capital in any one particular ETF. And you can also invest in corporate bonds, municipal bonds, etc. You might not get the tax benefit depending on where you live. Talk to your accountant first. And you can always rewind this weekly webcast to see my teaching about bonds as well. Then once you feel comfortable with the investing process, then I would start doing your own research on companies. And when you buy stocks in your portfolio, I don't want any one stock to be more than 5% of capital. And that's just good risk management and portfolio diversification. So that means if you're going to own stocks in your portfolio only, you have to have a minimum of 20 stocks. I'd also make sure that you don't have too much exposure to one sector. For example, don't have more than 20% exposure to the technology sector, or 20% to healthcare or financial services or retail, etc. Make sure you're diversified as well from an international perspective. Yeah. Okay. But what I would do, Mina, also is if you're new to investing, call the 5 biggest banks in your country and ask to be transferred to the brokerage department, and just ask them what their commission fees are. And whatever the lowest fees are, that's what you should do. That's who you should invest through. Yeah. Okay. And don't use TikTok for stocks. Sometimes they're good. But the problem with using TikTok or I don't know, doing a search on a Jim Cramer, for example, is that these people are really good salespeople to the extent that you'll end up buying before you do your research. And the problem with that is that if the stock falls, you might sell and panic. I want you to do your own research always. Yeah. And whenever I do investment research on a company, I write a thorough investment research report. And then what I do is I buy the position. And once it's a 5% maximum position in my portfolio, if say a year or two goes by and the stock is, oh my God, it's crashing. And I'm like, oh my God, I want to sell this stock. What I do, just to stay intellectually honest and unemotional, is I go to that report that I wrote 2 years ago and I pick it up. And I tell myself this, okay, this stock is down a lot because of this brand new piece of news that just came out. Had I known about this piece of news 2 years ago when I wrote this report, would I still have bought the stock? And if the question is no, then sell it. If the question is yes, as long as it's not a 5% position yet, you can scale up to a 5% position and buy weakness. Yeah. Keeps you unemotional. And the most successful people in business are highly unemotional. And that way you're a contrarian. You buy when everyone else is freaking out, man. That's the only time to buy, when everyone's freaking out. Because if you buy a stock that everybody loves and everybody owns, then there's really not that many incremental investors out there to buy to push it higher. You want to invest in broken stocks, not broken companies. What that means is this. If a stock chart looks like this, and you do your due diligence and research on it, meaning you analyze the fundamentals, the valuation, and technical analysis, and you conclude after your research that this is just a broken stock, it's not a broken company, it's a good company with good fundamentals, well, it might be a good buy opportunity. And I want you to think long-term as well. I don't want you to invest just for 1 year. I want you to be an owner of a stock. Think about 5 to 10 years. Kind of like Warren Buffett. When he buys a stock, he assumes that the market's going to be closed for the next 10 years. Now, obviously, he knows the market won't be closed, but that's how long-term focused he is. And Warren gave Mr. Buffett gave a great example on Coca-Cola. He said, if you bought Coca-Cola day one, right after the IPO, you'd be down 50% 1 year later. But if you held on, of course, you make a fortune in the long run. That's what I want us to be, is long-term investor. I don't want you to try to buy a stock because you see 10% upside in the near term. Because stocks go up and down in a short amount of time because of random events, like what the Federal Reserve might say, or what Biden might say, or Trump might say in the election debates. You got to be long-term focused, and you'll sleep better as well. Yeah. Okay. All right, give me 1 second. And then Vic wrote here, and if I missed any questions, just type them again, please. So I read everything. Yeah. Vic wrote, Chris, good to see you. Good to see you too. How are you? You wrote, from your Mark Cuban quote, what does ideas are commodities but execution is not actually mean relative to execution? Yeah. So what Mark Cuban means by that is, like, a lot of people come up with good ideas, but it doesn't mean they can actually turn that into a money-making idea. That's execution. So good ideas are commodities. A lot of people can come up with them. But you always want to invest in people that can execute, meaning turn that idea into money. And so in venture capital, I often think to myself, past performance is indicative of future performance. And of course, when you invest in publicly traded stocks, there's all those disclosures that past performance is not indicative of future performance. I think it is with private companies. Because if I invest in a jockey, meaning a great management team that has scaled many companies, had many successful exits in the past, then the probability of me making money invest them again goes up a lot. Yeah. It's kind of like how when I worked in the public and private markets, I invested a couple of times in this guy named Frank Slootman, really good guy, right? And he was the CEO of Data Domain. He was great. And then I participated in the ServiceNow IPO back in the summer 2012. That's ticker NOW. Because of Frank Slootman, he's great. And Fred Luddy, the founder. Then Snowflake was another incredible investment because the management team there, it was Frank Slootman. And I think he might have resigned or he's stepping down, retiring, I think, according to the Wall Street Journal. So the bottom line is you always invest in great people. The jockey is more important than the horse. Ideas are commodities, but execution is not. And the type of people you want to invest in is, people that get you really excited about a product, and somebody can sell. Like, I like to look for like a Mark Benioff or a Sir Richard Branson or Elon Musk. Somebody gets me excited about a future product that's not out yet. And Elon is great at this. But you want to be controversial as well, but tasteful when you're selling. And the reason I say that is because you'll get free media attention. So, for example, Mark Benioff, who left Oracle when he was 26, I think he was the youngest vice president there in 1999 to start Salesforce.com. What he did was he was very controversial because he said that software is dead, and everybody was like, "WTF? Like, why the face?" And the reason he said software is dead is because cloud computing is the future, and traditional client-server-based software you download just isn't efficient in the long run. So he was controversial, and as a result, he was able to network and get on all the major finance and tech TV shows. You got to be controversial like that, but tasteful. And you got to be able to sell right from your heart. And quite often what happens is venture capitalists will invest in management teams, companies, that might not have the best ideas, but they've got an amazing management team. It gets us excited. And that's important because I used to be a full-time venture capitalist. When I would meet with a management team, I wanted to get excited because I thought of myself as a customer buying their product. If they can't excite me, how are they going to excite their investors, so to speak? And so in venture capital, you always rather invest in an A management team with a B business model instead of investing in a B management team with an A business model. Okay, next question's from Mina, which is, I'm going to be for a long shot. I'm a construction worker apprentice in Toronto, but I'm having a hard time for companies hiring me. I'm a woman and I'm an apprentice. Please advise. Yeah, that's a great question. So anytime you see a job opening online, you literally have a 1 in 250 chance of getting that job. And the person that gets that job knows somebody at the company. So what you need to do is you need to know people at the company. How do you do that? Well, step one, and you can go to harounmba.com, join my silver MBA if you want. I can help you with it. But step one, create an amazing LinkedIn profile. Okay, like incredible profile. Step two is start writing about the construction sector or whatever it is you're most passionate about on your LinkedIn profile, so you can be thought of as a thought leader. Step three is do an advanced search in LinkedIn and find people that can be potential hirers of you that have at least two things in common with you. Maybe they went to the same school as you and they're a member of the same club. Then reach out to them. Okay, reach out to 30 people at each company you want to work at and send an email that says exactly this. John, hope all is well. I also went to XYZ school, XYZ, you're in Canada, school, and I'm also a member of X Club. Please let me know if you have time for a coffee or a quick Zoom meeting. Thanks a lot, your future boss. No, thanks a lot, Chris. Now, you'll notice how I didn't say why you're meeting or why you're reaching out to them. The reason is, if you tell them because you're looking for a job or get hired or something, they probably won't answer because they feel bad they can't help you. But if you leave an element of surprise, then they might be curious, go, okay, I'll take that meeting. And if you think to yourself, why would they take a meeting with me? Well, I want you to picture this. Imagine it's 20 years in the future, and you're way more successful than you already are today. And somebody 20 years younger than you that is identical to you, and went to the same school, member of the same club, etc., reaches out to you. Would you take that meeting? Of course you would. Now you got to execute. You got to follow through and set up 30 meetings. And once you get those meetings, you might think, well, what do I say? Well, in the first 10 minutes of that meeting, I want you to bond. You always want to bond before business. Talk about what you have in common, right? Like, for example, I don't know, is that restaurant still open on Main Street or on campus? Or have you seen the new student building? Whatever, something you have in common. And if you don't know what to talk about with them, go to their X, meaning Twitter, and Insta profile and see who they follow. So you have something in common with them to talk about. So for example, if they follow baseball, you can talk about baseball. And this is a bat, I think you mentioned you're from Canada, George Bell. He signed it for me too. He was MVP in 1987. Talk about something you have in common, because sports is great boardroom talk. Or I don't know, if they follow something else you're passionate about, you can talk about that as well in your meeting if you want to. Then after 10 minutes in that meeting, what's going to happen is they're going to say this, and they're not going to say it as harshly as I'm going to. They're going to say, why are we meeting? And then at that point, what you do is you say that, well, I'm really passionate about this industry or potentially working at your company, and here's why. And I'd love to ask you if you could help me get a job at your company. You can dance around it a little bit, but you know what? Closed mouths don't get fed. You have to ask. Asking you'll receive. It's prophetic. It's been true since the beginning of time. Thank you for those hearts down there. You have to ask. And if they say, no, we're not hiring, then you can say this. Well, when might you be hiring? And they say, well, in 3 months, actually, we're going to be hiring. Then you reach out to them in 3 months. If they still say no, which means not yet, then you can say to them, well, do you know anybody else that also went to our school that might be hiring? And ask for introductions. Again, ask and you'll receive. It's prophetic. It's been true since the beginning of time. Yeah. And if you don't network, then you'll never reach your full potential in life. And one common element I see from a lot of my students is, they graduate from great, undergraduate universities. And they kept their heads down their whole life, got good grades. Their parents were proud of them. They were proud of themselves. They get a good job. And then 5 years or 10 years goes by and they look around. They're like, dude, I don't get it. I'm doing a better job than these people here, but they're all getting hired or all getting raises and promotions faster than me. Why is that? Because they asked. Remember, closed mouths don't get fed. How do they ask? Well, what they do is behind closed doors, and every vice president in your company, in all companies, and executive vice president and CEOs, behind closed doors, they've asked for a promotion or they've asked for a raise. And I can tell you exactly how to ask for a raise or a promotion if you want me to on this call. Yeah. Networking works. Your network is your net worth, and relationships are always more important than product knowledge. Yeah. Okay. And then Eugenia wrote, it's true about real estate. I've been in the business for over 4 years, building a portfolio for investors. One note about Florida. Stay away from condominiums at the moment. New regulations on condo fees. Yeah. And I've even seen, since we had that tragic collapse of that condo in Miami a year or two ago. I know what's coming. Yeah. And I just buy houses in Florida. Yeah. And where I've been concentrating is close to Boca Raton. I don't buy directly in Boca because it's too expensive. What I do is I buy in Delray Beach, about a 5-minute drive from the downtown and the beach. Yeah, that's a sweet spot right now. Yeah. Okay. All right, next up, Manas wrote, it's better to try and fail than to sit on the fence. Thank you so much for that idea, my mentor. So, by the way, sorry that Justin Trudeau beat me in McGill. Yeah. Yeah. And that was a story I explained last week where I got Heisman by a Kennedy. It was hard for me to compete. Yeah. Yeah. Some people, I'm not making a political statement here, but some people in Canada are wearing red hats that say, this is not a political statement, I'm just telling you, some people are doing this. Some people in Canada wear a red hat that says, make Trudeau a drama teacher again. Yeah. Nothing wrong with drama teachers. Yeah. My dad used to tell me growing up, those who can't do, teach. And those who can't teach gym class. And I suck at sports, so you're all out of luck. Yeah. That's not true. Teachers are awesome. I love teachers. Yeah. Okay. All right, next up we got JB, Just Business wrote, okay, give me a second here. Whoa. Just Business wrote, hey Chris, what changes are going to be there in the hedge fund industry due to AI? If a person wants to get into traditional hedge funds, what AI tools should that person learn? Yeah. One thing that AI will never be able to replace is reading body language in meetings. So if you meet with, say, a CEO, and you know the CEO is always in a really good mood. And they're really stressed out. They're not in the best mood. It could signal that maybe business is not good. Right? And so AI is not going to be in every grip and grin one-on-one meeting. Yeah. I think that what AI will do is there will be certain algorithms that are created by sophisticated hedge funds that probably exist today, but you don't know about them because they're making money, where they use AI to make a lot of money. And the best example I can give is Renaissance Technologies. And God bless Jim Simmons. He just passed away last week. He's a rock star, and he's the #1 AI investor on the planet. So Jim Simmons, what he did was he started working at the NSA in the early 80s, mathematician. Then he quit and he started a hedge fund called Renaissance Technologies. And it's artificial intelligence-based algorithms that pick stocks. And he made a killing. How much? A 60% gross adjusted return every year on average since the 1980s. And we don't know what is in the thousands of Linux servers running in parallel, for example, that pick stocks. It might be something along the lines of different inputs lead to outputs. For example, if it's raining a lot, then short restaurant stocks because people don't go out to eat when it's raining a lot. Yeah. So I'm sure there's a lot of hedge funds that are looking at algorithms to be able to pick stocks. Yeah. Yeah. Now the danger with that is quite often these algorithms rely on historical data trends. And every now and then you have what's called mean reversion, right? Where the markets don't work the way they should work. And these algorithms get crushed. And the last time I remember this was back in August of 2007, when all the crappiest companies went up and all the best stocks went down. And Renaissance got hit hard then, and so did the Goldman Sachs Alpha Fund as well, apparently. Yeah. But I don't think AI is going to replace every single role. Yeah. Yeah. But if you want, in my MBA degree program, I have a course exclusive. They'll teach you how to use AI to do investment research on stocks. Let me show you how to get that. So let's go to... Let me go to all my MBA programs here, or all my my courses. So in my MBA programs, what's included are these electives. They're free for MBA students. And this course here is called ChatGPT for Investing in Stocks, where I teach you how to use all major AI products, including Gemini, to do investment research. It's not perfect yet, but it's getting there. To the extent that if you use Claude.ai, what you can do with Claude, and Claude was started by a couple dudes that were at OpenAI and they quit. But with Claude.ai, what you can do is you can upload 4 or 5 financial statements or 10Ks annual reports and tell it, create a spreadsheet of the income statement for all 5 years. Then you can import that into Excel and then just do your financial modeling from there. Yeah, there's anyway a lot of tips and tricks in that elective. Yeah, that use AI to help you with investing. Yeah, you got to double check the data always because of hallucinations, meaning these AI products are confidently wrong. Yeah. Okay. in terms of what AI tools should you learn to help you in the hedge fund industry. So sign up for my MBA product on the website I showed you. And then if you go to the very last lecture, I have tons of free electives after you sign up, including several AI electives, including the AI finance investing one I just showed you. Yeah. Okay. And then Mina wrote, I'm definitely going to rewind and watch the video, and 100% I will not TikTok advice. Thank you so much, Chris. You're most welcome. Yeah. It'll be fascinating to see what happens with TikTok. Yeah. Yeah. If TikTok does get banned, I'm sure investors will look to buy Facebook. Yeah. Or Meta. Yeah. Because of Insta. Yeah. But I still have a guy, one of my mini contractors, who's amazing. He's great. His name is Jean-Marco Lubiana. Hire him, please, everybody. He takes this weekly call I do. And then what he does is he creates TikTok videos. And you can always follow me on my TikTok account as well. Okay. All right. We've got a couple minutes left here. WH Health and Piano Exercises wrote diversification ? As Kepler Finance used to say, all correlations 10 to 1. Yeah. I don't believe that the markets, and this is just me, I don't believe that the markets are efficient. Otherwise, we'd all just buy ETFs. Yeah. And the best way to invest is to look out long-term and value companies based on your earnings estimates in 5 or 10 years. Yeah. So you can skate to where the puck is going to be. Okay, next question is, hi Chris, kindly advise. Any overview for the role of transport analyst in the future? I just got an offer for the role. Transport analyst. Oof. I don't know much about that industry. Okay, I got an idea for you. So what I would do is I would analyze. There's a massive wall that's being built in Saudi Arabia. It's going to cost like $1 trillion. I would analyze the technologies and AI products they use to create that in terms of drone deliveries, etc. So let me go long building, Saudi Arabia. Here it is here. It's a 170 kilometer mirrored structure they're building in Saudi Arabia. It's a skyscraper. It's unbelievable. Let me get rid of that. Hold on, let me get out of here. So it's this incredible structure they're creating. It's called the Line, I think. Yeah, it's 75 miles long. And I would take a look at just the infrastructure of how they're building this, as well as the future of transportation within it, right? So there's going to be drone deliveries for everybody within this, et cetera. Obviously, high-speed rails and all that stuff. So I would check this out. What I would also do is, depending on where you're located, is I would analyze a lot of infrastructure transportation projects built in China. You know, every single year, China builds out more high-speed rail than we have in the United States. See how they're doing it, yeah. And maybe analyze the TGV, the train to Grand Vitesse in France as well, just to really understand next-generation transportation. Yeah. Okay. All right, and Manas wrote, thank you for everything, my mentor. God bless your family and you all, and Haroun Education Ventures forever. This is my 180th webcast. I'm loving it. Yeah, I love you. All right, man. God bless you. Thank you for my favorite emojis as well. God bless you. Thoughts and prayers with you. Namaste. I love you. Thanks. Okay, next up, Ants of Empire wrote, hey, Chris, do you think the meme stock phenomenon is unhealthy for the stock market? What do you think is going on? Yeah. Yeah, so what happened this week was, I think his name is Keith Gill, the guy that kind of got everybody on Reddit, et cetera, excited about meme stocks in January of 2021. Keith Gill, he released his first tweet, or X, in 3 years. And so what happened was GameStop and AMCC, doubled immediately and then pulled back a lot because of that tweet. Right, and his tweet would just said something like "I'm back" or whatever, and so that's what happened this week when it comes to volatility. In terms of unhealthy, Yet any excess volatility is unhealthy for the market, right? And I don't think anybody should be a day trader, just be a longer term investor. But I'd be careful too. And I say this with love in my heart. And I love the Reddit crowd. I love what they stand for. They're wonderful. Just be careful, because I think the Securities and Exchange Commission at some point might consider coming after retail investors that hype up stocks. Yeah. So I would be careful with that and just think long term. Yeah. And in my book here, which you can get on Amazon now, it's called Finance Essentials for Managers. There's a chapter on what happened in January 2021 and why it happened with GameStop, which went up 29.4 times in January 2021. Yeah, so I talk a lot about that in here and many other investing tips. Yeah. Oh, that was a shameless plug. I'm having fun. Okay, Q Franco 1 wrote, hi again. Coming back on what you said about selling U.S. state bond ETF when rates drop when everybody else does the same. This will also drive the selling price down. So where is my profit? Yeah. If you're buying only 10% of the average daily trading volume, which I talked about earlier, you're probably not going to move the stock very much, or any investment class for that matter. That's why I only recommend being a maximum of 10% of the average daily volume whenever you buy or sell something. Yeah. Now, the way it works with a lot of people get confused by this, but the way it works with bonds is when interest rates rise, certain bonds go down in price. And let me explain this in more detail. So let's say that interest rates are 5% and you buy a 5% yielding bond. And then interest rates all of a sudden go up to 10%. But that bond you own is still only yielding 5%. So what's going to happen is people are going to sell that bond that you own, and they're going to buy the 10% yielding bond. And that's going to drive the price down of that stock, or of that bond, right? So there's an inverse relationship. Yeah. And if that sounds, and vice versa, if you buy a bond and if interest rates are 5% and that bond is 5% yield, and interest rates drop to 1%, then people are not going to buy new bonds. The 1% bonds are going to buy yours. Yours goes up in price. And if that's complicated to understand, picture this. You own Coca-Cola, ticker KO, because it has a dividend yield of 3%. And Coca-Cola's biggest competitor, Pepsi, ticker PEP, also, and this is factual, also has a 3% dividend yield. Well, if Coca-Cola decides to double the dividend yield from 3% to 6%, you're going to sell Pepsi and buy Coke. And check out the vlog I'm publishing tomorrow as well. It's a long one. I think it's going to be like 40 minutes, and it teaches you bonds from scratch. I had so much fun making it. Yeah. Okay. And then Just Business wrote, tips to network and meet great people who are at a higher level than me, free ways and paid ways to meet and network. Yeah. So I wouldn't pay to network. The free way is this. Just set up a great LinkedIn profile, do an advanced search on people who have something in common with you, and just set up meetings with them. Yeah. Okay. And then Santiago wrote here, hi, thanks for all your content. It's awesome. Thank you. Can you walk me through private equity sports business trends? Yeah. So I would say that investing in sports teams is not a great business model, right? A lot of times what happens is you have billionaires who are bored and they want their ego to propel them to higher levels. So they'll invest and buy a sports team. But you actually don't make money from the sports team every year. The only way you make money is capital appreciation when you sell it later. Yeah. Little side note. Whenever an entrepreneur or a founder or CEO of a company that you're investing in buys a sports team, consider selling that stock. The reason I say that is because anytime you have, a founder or a CEO that you're investing in start a new side project, it means they're going to be less focused on execution of their current company. And I used to look to short companies based on that and many other factors when that happened. I'll give you an example. Elon Musk. The second he announced a couple of years ago that he was going to buy Twitter, execution at Tesla really went down the tubes temporarily. They didn't have any groundbreaking new products. You can look at the stock chart, you'll see. And he really took his eye off the ball. So I'd always be careful with companies when the founder or the person running the company decides to have a new pet project. Yeah. And I got to wrap up this call in a second. Yeah. Okay. And then Mina wrote, "Thank you, Chris. Yes, please. Could you mention how to ask for a raise?" Yeah, absolutely. Okay. So here's how you ask for a raise or a promotion. And by the way, most of the time you'll never get it unless you ask. It's just the way it works. So the best way to ask for a raise or a promotion is to do this. Wait for your boss to come up to you one day and say, "Hey, great job on whatever. Good job." Then you say, "Thank you. Do you have time for a coffee?" And then what you do is during the coffee meeting, you start with this, if true. I just want to say I'm really proud of our accomplishments. We've accomplished a lot together as a team. Give me a second here. We've accomplished a lot as a team. You don't want to make it seem like I. It's all a team. That being said, as you know, it's really expensive to raise a family here, and I'd love to provide the highest standard of living I can for my children. As a result, I want to ask you, please, if you can give me some guidance on what I need to humbly accomplish in order to be considered for a promotion or a raise. Then what they're going to do is they're going to give you lots of tips. You write all of them down. You thank them for their time. And if you went out for a coffee and the bill comes, you have to do this. "Oh, I have alligator hands. I can't find my wallet." And T-Rex can't do push-ups. And so you write down exactly all the criteria they told you. You thank them for their time. Then, 3 to 6 months later, if they congratulate you again on a job well done, then what you do is you say, "Great, do you have time for a coffee that you'll pay for?" No. And during that meeting, you tell them this. I love our team and the prospects of our team and all that stuff. Now, a couple months ago, we sat down and you gave me great advice on what I need to accomplish in order to get promoted or a raise. And I've humbly fulfilled all that criteria. As you know, it's expensive to raise a family, and I want to provide my family the best standard of living. So I'd love to ask you to please give me a raise or promotion. And if they say no, then don't pay for the coffee, of course. No, if they say no, then you ask them why. What else do I need to achieve? And you write it down, then rinse, lather, repeat, keep meeting with them until you get that promotion. And the harsh reality is that anybody that has gotten promoted at your company or any company, or as a senior level executive, behind closed doors, they've done exactly what I'm telling you to do. Now, regardless of whether or not you think you should get a promotion or a raise, I still want you to sit down with your boss every 3 months and ask for feedback. And the reason is, you just ask them, how can I add more value to the team and stuff? Subconsciously, they will think that, hey, this person is long-term focused, man. Yeah, this person's not a flight risk. So if I have to let people go, this is a keeper. And also, it will help you not lose your job, because they'll tell you what you need to accomplish to add more value. Do that every 3 months, always. Another thing you can do if you work at a very large corporation, and I have to wrap it up after this question, sorry. If you work at a very large corporation, what you can also do is contact HR or go to your HR portal online and get the criteria for what you need to do to get to the next level, like promote to the next level. And then I want you to start accomplishing all those things as well, because it's on that checklist for you. And last thing I'll say, and this is kind of out there, but I want you to also dress, if you're up for promotion, I want you to dress the way somebody would one level above you. Because subconsciously and consciously, I want you to prove that you can do the job at one level above you where you're at right now. Okay. All right. Well, thank you, everybody. I know there's a bunch more questions listed here. Just save them for next week. Or if you're in my Silver MBA degree program, you can ask me in a couple of minutes on our weekly 1-hour Zoom call to check out my MBA degree program if you're interested. And all my products have 100% money back guarantees. Okay. And I always tell my students, if you're not getting at least a 10 times return on your investment in the first 30 days, ask for your money back. And if you want, you can schedule a Zoom call with me. There's a blue button here I'm partially covering up. Click on that if you want to set up a Zoom call with me to talk about joining any of my MBA degree programs. Or if you want to purchase, just click here on all MBA FAQs and select the product you're most interested in. Again, for people in my Silver MBA program, I'm going to start my weekly 1 hour Zoom call with you right now. All you have to do is go to the very first lecture in your Silver MBA curriculum to get a link to that Zoom call. It's a 1 hour call. And for those of you in my Gold and Platinum MBA program, I'll see you at 11:20 today for our weekly 2 hour call. God bless y'all. Have a great weekend, and I'll see you next Thursday and every Thursday forever. Thank you.